What's going on, everyone? I hope you're having a good day. And today I'm going to be going over May 17, 2024's recap. And I'm also going to be showing you guys all the concepts from the 2022 mentorship that are important to me, at least, the ones I use. And they're very, very beneficial. And if you want, go watch the mentorship by yourself. It'll help you out a lot. Or just watch my summaries of the concepts that ICT teaches. But anyways, now let's get into the trading video. First of all, we got to determine our bias. And after we determine our bias, it's literally half of the word is one. More than half is one, actually. Like literally 75% of it is one. Now you just have to make sure your entry is correct. Firstly, I wrote down the reasons for bearishness and then bullishness. We only had two reasons for bullishness, which was that we hit the 50% of this range right here from this low. I'll mark it out real quick. From this low to this high, we had hit the 50% area. So now if we wanted to go up, we will be ready to go up. And number two for bullish, this was that the daily trend is bullish like a lot because as you can see the past 3 weeks we've just been bullish all day, every day, like almost all the days we have been bullish. So that's why I was also considering that into account. And then the reasons for potential bearishness were that all-time highs had been stabbed right here. So these were all-time highs here, and once we started going down, people put their stops here because they thought it would keep going down now because we had hit all-time highs, and they got into shorts here. But then we had to take out their stops. The market took out their stops right here, which is what I anticipated yesterday, and I actually made money on it too. So if you want to learn about that, make sure you go check that video out. And after that, we dumped in the PM session, and then overnight we were just consolidating. But that was one reason I was bearish because this had happened. We had swept all-time highs and created new all-time highs, which is what happens in history. I'll show you real quick by just moving to the side. You'll see right here. These are all-time highs. We show a little bit of retracement, and then we stab into it, and then we go all the way down, right? So I'm just using history, right? Number two, ICT model was 2022 ICT model was present on the hourly time frame. I'll show you real quick. So liquidity got swept. We see displacement of this short-term low, and this low also showed displacement. It didn't close below it, but we still went below it aggressively. And then we had this fair value gap right here. Re-entry to that fair value gap. That's a perfect entry ICT model. As you can see, obviously we would have gotten stopped out, but that's not what I'm talking about right now. We're talking about the buy, like the where market wanted to go in this case was down, and it showed an ICT model right here, which was bearish. That number three, power of three on the weekly. So if we look at any candle, first we have accumulation, then we have manipulation, and then we have distribution. So on the if I go on the weekly candle real quick, just to show an example of this, you'll see every candle here has a long. This one has a long wick. This one has a tiny wick. This one has like a wick as well. These wicks are manipulation. We always manipulate before we distribute to the actual side where the market wants to go. And after we distribute all the way, like we went all the way up to here. Think about it, right? On Friday or no, not Friday. On Thursday or Wednesday, we were all the way up here. Then at the end of the week on Fridays, we are expecting either consolidation or a move down to retrace a little bit to form this wick right here. So that's what I was anticipating. I was anticipating us to move down on Friday just to make that wick a little bit more. And that was one of my bearish confluences. And lastly, but one of the most important ones for me was that there was a lot of generated sell-side liquidity on lower time frames. I'll show you right now. All of these lows right here, this low, this low, this low, this low, this low, they're all considered generated sell-side liquidity because market never took out these stops. There's stops resting here, 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 stops resting here. Market never took them out until the bearish move happened. So I was expecting to move down. Also, by the way, this is ES. On NQ, the generated liquidity is much more clear to see. But on ES, it's a little bit more like choppy looking. But I'll show you on NQ real quick. But those were my reasons, and that's why I was bearish, because there were 4 bearish reasons and then 2 bullish. So I picked the one with the strongest confluence, strongest bias, and that was bearishness. So now we'll get into the entry model. Alright, so this is NQ, and these red lines are just market like opening times, like 8:30, 9:30, and then 11. This is the trading window I trade in. And what I saw in the 15-minute was that this not fair value gap, I'm sorry, this order block, bearish order block, had been tapped into before market had opened right here. And also, I was anticipating this liquidity to get taken before 8:30 or at 8:30. I can't talk. Or at 8:30 for the manipulation phase. And then I also marked out midnight opening price and 8:30 opening price. After this liquidity had gotten swept, I went down to the 3-minute. On the 3-minute, that I saw that there was also liquidity right here that we had just formed before market had opened. So I was also anticipating this liquidity to get hit. I was not trying to take a setup because of a liquidity sweep before market opened. So after that, this liquidity right here got taken 3 times. This is the pattern that I also taught. Boom, 1 tap, 2 tap, and then 3 tap. And this made me really, really confident that I was going to go down from here because it was also above 8:30 opening price, which is the manipulation phase. And then we broke lower. This is the swing low right here, right down the high. Swing low right here. I don't know why it's not straight. What the hell is going on? Okay, there we go, straight. I'll make it red. That swing low got broken. We left the fair value gap right here. The fair value gap got tapped into right here on this candle. I entered on that candle and I rode the profits all the way down to midnight opening right here. And it was a beautiful trade. My stop was above here, and I hope this video helped you out. Also for proof, right here. This is proof. Where's the trades at? Right here. Made 525. Peace out for now. I'll see you tomorrow.